Welcome to Non-Consensus Investing. I'm Ahluwalia, your host and CIO at Lumida Wealth, where we specialize in the craft of alternative investments. At Lumida, we help guide clients through the intricacies of managing substantial wealth so they don't have to shoulder the burden alone. Through this podcast, we draw back the curtain to reveal the strategies employed by the best in the business for their high net worth clients so that you too can invest beyond the ordinary.
All right. Hey, Mark, how are you?
Good, Ram. How are you?
Thanks for joining,
Tuesday.
Mark. Happy Tuesday as well. We got this oversized image of you.
Me too.
Pointing down. Don't get
I'm actually very proud. I do have hair. Sorry.
You've got more than I do.
I know.
I know we're going to cover a few topics, but we may have to add hair preservation to one of them. The more kids that I have, I'm 3 now. There's less and less hair. But
I actually have
for doing it.
a few kids and a couple of grandkids, and I still got it. Yeah.
Is it a you? It comes back at the end, like the hair?
It does. It regrows.
Really? Okay. I have something to look forward to there. That's awesome. Thanks for trying. I know we're going to cover quite a few interesting topics, and I've known you, Mark, for I think over a decade now, and you've got an incredible background, not only as a venture investor at Two Sigma, but also as a bank operating executive. And I always have fun talking to Mark, and you try to surround yourself with people you can learn from, and Mark is one of those people I count on to learn from regularly. Some of the topics we wanted to touch on included a non-consensus investing. What are some non-consensus ideas that are not in the mainstream? We want to talk about digital assets, AI, reshoring, longevity. Maybe we get into some ed tech, commercial real estate, upcoming IPOs. We'll see what we can cover between now and 12 p.m. We'll have fun with this, though.
Yeah.
Mark, why don't we get into it? How do you see the world today? We're on the precipice of so much change. We've got the onset of AI, semiconductors. There was this LK99 that doesn't seem to be going anywhere. But how do you view the world today?
Yeah, thanks. How do I view the world today? Let me give you the positives out there. I think part of the positives are that I think there's some really interesting things going on in the tech part of the world, in the healthcare space, in the AI space, like Ram talked about, in the software space, even in things like onshoring manufacturing, 3D printing, additive manufacturing, subtractive manufacturing. On the technology side and the productivity side, there's some really interesting things going on. And I think the negative side has been discussed a lot. You have interest rates high, you have issues, political issues, both domestically and internationally, that are problems. I think the world is like in a tug of war right now. And what that leads me to believe is that things will be flattish and returns will be lower and risky things may not work out as well. And so it's a period of time to be probably a little bit closer to home and slightly more risk averse. One more positive that I want to talk about is the world's also a relative place. And the United States still is doing better than a lot of other parts of the world. I think we're more innovative and entrepreneurial than maybe Europe. I think we're having higher growth in Europe. I think we're a better business environment than Latin America or Africa. Some parts of Asia are interesting, and China it's a place where we should partner there, but it's really hard to figure out what's going on. So
The U.S. is the least dirty shirt in the laundry basket, right? We got high debt to GDP, but rule of law works.
Yes.
And people want to live in the United States and build a career here and start businesses here.
I was trying to be more politically correct than you, but yes. And yeah, I think the United States, yes, we have a legal system that works, and that's super important, mostly works.
So they'll cycle through some of those. And on the productivity side, you mentioned 3D printing. 3D printing is quite interesting because it was a bubble, probably 10 years ago or so. You had these stratospheric valuations and it crashed down to earth because it didn't deliver. But it looks like you're seeing evidence on the ground of how 3D printing can enhance productivity. Are there one or two examples around that?
Yeah, no, I think if you go look, I think some of the 3D printers that came out through the bubble cycle and the stocks have come back down. But I think there's some new technologies out there where people are, some of this 3D printing, both additive and subtractive, are really starting to scale a little bit. It's still at the early phases, but it looks promising, and it's super interesting.
What's additive versus subtractive? What's the distinction there?
Additive is really 3D printing, which is you have a material and you build layers on it. Subtractive is it's an old business. It's a CNC milling machine, and where you have a block of something and you then use point clouds, tool paths, and different tools to actually cut out with very tight specifications out of a block of metal. I actually, as an aside, I actually have a patent in that space. I did sell the patent, but I actually have a patent in that space from a long time ago, using a 3D scanner to scan the bottom of mineral specimens, which were very irregular, to use it to make bases to put the minerals in for display in museums. And it basically, and that's the process that's used today to figure out how to prototype and make parts.
I've seen stories around people using 3D printing to build homes. I don't know if that's actually taken off as reality or whether it's going to be used for more kind of light plastic molding type use cases.
Yeah, I think it's still at early stage, but I saw some big machines that are actually 3D printing, I think almost concrete. They're actually printing the homes.
That's amazing. So the story is bright on the productivity front because of AI, 3D printing, and I think we'll probably get into like synthetic biology and genomics, which is finally starting to deliver as well. And that's a mix of how we live a better quality of life, because that doesn't show up in the productivity statistics for you living longer and better. But on the other side, the tug of war, what you called, is around higher rates, political conflict. And that's why on balance, you're saying, hey, I think this is neutral or time to be more cautious around risk.
Yeah, I like to keep life simple. And you look out there, and right now I can leave money in a money market fund or buy 1-year treasuries or 6-month treasuries and get over 5%.
It's incredible.
And that's really incredible. And for a New York resident, you're exempt from state and local taxes. In today's world, I don't know what the right thing to do for any person is, but I'm just saying that for the first time in a long time, that we now have rates that are very positive. We've been in a 0% interest rate environment for years and years through the pandemic, and it looked like it was headed there right before the pandemic. The question I have, and I don't know the answer to this, is having 0% interest rates environment lead to companies that were either way overfunded, misallocated capital, don't understand their financials, and what is a really good profitable sale. And now in today's world, with 5% or higher interest rates, or close to 5% even in the 10-year, what does that mean for capital allocation? What does that mean for accounting systems? Do we need to really start thinking about, we need to have good numbers, we need to really focus on what is GAAP, what is cash flow, and I'm a believer that's one of the big themes over the next 5 or 10 years.
I fully agree. Look, my view is yes and yes on the earlier question of what it meant for valuations and access to cheap funding. If there's no distinction in the present value of a dollar earned tomorrow versus 20 years from now, because you're in a low rate environment, then you're rewarding long duration. And that game is over, and there's a cost of capital. And as also, value has generally outperformed stocks over the course of decades. But in the 2010s, that was not the case. Growth has trounced value, and we may be entering a world where that starts to change because of higher real interest rates.
And because of high real interest rates, and I'm just speculating or thinking out loud, and I don't know the answers here, a couple of positive things could happen with that. Number one, retirees and people on fixed income that have cash in the retirement accounts all of a sudden may have income. And that could be a positive. The second thing is, do wages start to increase here a little bit, and maybe some of the income inequality comes down? Because higher rates are not good for stock prices, but they may be better for labor settlements and higher wages so that people can actually start catching up and making a better living. Those are some of the things that I'm looking at. Yeah, I think back to your point and what we're talking about here is the world is changing and it's more back to a normal, maybe more back to a normal type of world. You got to figure out how to adapt to it.
I fully agree. No, I agree. I think you nailed it too. Like higher real incomes, we are seeing that. And the technology we're seeing is improving the ability for employees, employers to create more value, especially around AI and the promise of that. No, I agree. I think I'm more on the optimistic side of things, but from an asset price and investing perspective, this is one of those times in history we've got to make sure you're not being complacent and reassess your base assumptions. And what's your take on barbell investing? I know you and I have talked about this approach before.
Yeah, again, I don't give investment advice. I don't want to,
Sure.
I got to give that.
That's my job.
Yeah, you didn't give investment advice. Barbell, yeah, I guess I described the concept, which is you want to have part of your portfolio in higher risk assets and part of your portfolio shorter in things like fixed income and higher yielding earning assets today. Back in the 90s, when rates were different, barbelling meant you owned treasuries and 30-year zeros. It was a somewhat different concept.
Zero coupon bonds that
So you had the duration and sort of the thing out there and much more risk. But in a bull market, that risk paid off. So I think you can do lots of different type of barbells here. Right now, another concept is ladders. And in the fixed income market, it's really interesting. In a downward sloping yield curve, some would argue that at some point you're supposed to go long, even though you're not compensated. You don't think you're compensated. You can earn a higher yield by just staying in money markets. And the longer term stuff is at lower rates. That hasn't worked really to date, but maybe that's changing. I don't know.
It's a great point. I believe that is changing now. Like the move to make was to own short-term rates when rates were zero and rising.
Yep.
But now it's changed. My view is we're in the last few innings of higher rates, and I do believe they'll be higher for longer. But ultimately, the Fed will have to ease at some point, and that means your coupon is lowering. So you do want to lock in longer-term duration at some point. So that is something to consider. By the way, one other interesting point on the rate. So as you pointed out, one of the greatest bull markets in history was kicked off in 1982 when rates were very high. Equity PE multiples very low. So one of the funny dynamics in this asset classes is, yes, higher rates compete for investor capital versus equities. On the other hand, sometimes the best times to invest in equities are when rates are also very high. And we saw this in October of last year when rates were also very compelling. And at the same time, you just had 3/4 of a bear market play out. And you would have made money buying either bonds or stocks, but you would have done better buying stocks. And now in the last month, we're seeing the same phenomena of the 60-40 portfolio not working, right? Bonds are selling off and equities are selling off. So, I agree with your point. It's a great time if you're a fixed income investor and you need that steady coupon. But if you're an investor that's generating cash flow and can invest today, valuations outside of big tech are attractive.
Yeah, it was feeling like a little bit like 1999, about 6 or 8 months ago, with the rates rising, but technology earnings were pretty good and all that kind of stuff. Yeah.
And now let's talk non-consensus. We believe the best opportunities are when you have a non-consensus view, and hopefully you're correct. If you're non-consensus and you're wrong, presumably you're not paying too high a price, so the downside may be limited. So what are some of the kind of off-the-wall non-consensus, concepts or ideas you might have?
The first, I will get to one, but the first question I have, and which I think is interesting, is it because today's world is there's so much more information gets processed so much quicker? Does non-consensus ideas get discovered and taken out much faster than they used to? It seems like things happen much quicker when a certain part of the market becomes non-consensus, and all of a sudden everybody knows that that's non-consensus. Does that become consensus pretty quick?
That's fascinating. It's a
That's
fascinating
the question I have. I feel like I used to be able to process things quicker, but in today's world, you used to be able to read the journal. You'd have a competitive advantage on how many news sources you'd read, and things would take a while longer to filter into the market, especially short-term things. Now I feel like things filter into the markets really quick.
They do. There was this interesting interview with Stanley Druckenmiller. I don't know if you remember that at Bloomberg Invest a few months ago. And what he said is now when they have an idea, they invest in it first and then research it later because the cost of research is too high. I've seen that a few times myself. Trying to develop a point of view on a security or an asset class, and I'm watching the thing appreciate in the background. So there's something
really annoying. Yeah.
It's really annoying. I think part of it also though is it's human nature doesn't change. Your fear and greed is still there. In fact, the whole AI narrative, we did not see deliver into big tech revenue or earnings. In fact, we're seeing revenue declines around big tech, including stocks like Apple. So, that I would argue is more narrative, a bit of FOMO driven, which is a part of human nature. So you could say, is it information signal? Not quite. Is there information anticipating the latest trend? Yes. And there's value there too.
Yeah. So, yeah. And again, I'm going to reiterate this. I'm not giving investment advice. I just think the world is just interesting things to look at in the world. But back to non-consensus, one of the areas that I think is maybe interesting here is the Middle East, and specifically Saudi Arabia. And I have not invested. We don't invest there, but I have had some experience over there. I was on a bank board with Citi in the late 90s. And what's interesting there is they seem to be making progress. They seem to be trying to diversify away from their natural resources area. Socially, I think they've had their ups and downs, but they seem to be, again, making progress in that space. You see the percentage of women in the workforce is actually higher than you would think. There's a bunch of things going on there that may be happening. I just saw President Biden is trying to work out a 3-way deal or a 4-way deal between Israel, the United States, Saudi Arabia to maybe increase diplomatic relations, which I think obviously would be, not obviously, but I think it'd be interesting. So I think the whole Saudi and part of the Middle East is maybe an interesting place to invest. Back in the 90s, you saw the insiders were actually taking their capital out of the country and investing elsewhere. Now, I think what you look at is they have these big Saudi funds are actually, a lot of it is they're investing inside the country. And that shows...
We're referring there to
it shows optimism on the part of the insiders. Are there
That's a really interesting, it's fascinating way you look at it. You're looking like an insider ownership is accumulating at the country level.
At the country level versus taking money out of the country. And that's interesting.
Yeah, no, that's definitely not consensus. There's an iShares Saudi Arabia ETF. I was just taking a look at it quickly online now. It's got a 3-year return of 17%, 5-year 8%, since inception return of 9%. And I don't know the holdings, but I would presume like Aramco is got to be their top holding, right? It's got 30 dividend yield. I don't have a view on Saudi. Usually when I hear of emerging market growth opportunities, Dubai comes to mind, especially around how they've embraced digital assets. And obviously within Saudi, you've got the PJ Live. They're making bids for culturally relevant institutions. That's one. And two, as they've been trying to diversify their economy out of oil for some time.
They're building a $1 trillion city, I think, called Neom.
That's right. It's like a 10-mile long strip of a city in the middle of the desert. Hey, look, I guess that's how Vegas started at some point. You start somewhere.
That's why I like the whole venture capital world. And that's what sort of makes you optimistic is people are trying some really big ideas. And I have no idea whether any of this stuff works or not, but it's super interesting and super fascinating. And people, they're trying, and I think it's great. And
they're throwing money at a lot of stuff, right? The Saudis, they were almost 10% owners of Credit Suisse. As when that infamous press announcement, they said they would not add more to Credit Suisse, and CS was taken out over the weekend. That's one. Two, they were an anchor to SoftBank Vision Fund. and it's probably not doing too well. We'll see how ARM does. We'll come back to upcoming IPOs. But this is rule of thumb I have is if you're raising money from the opposite side of the world, then it's probably not a good business, number one, because you're not getting the best investor. Remember, like these fintech lenders are raising money from China. That didn't end well. And now Japan was raising money from Saudi Arabia. I don't know that they're great investors, but they're certainly...
Back in the 80s, I was in the I did some oil and gas investment banking, and the joke then was, by the time an oil and gas deal makes it to New York City, you don't want it.
Exactly. Saudi Arabia, I wouldn't put them in the smart money bucket, but they're throwing a ton of money. And is that enough to create opportunities out of that sheer capital willpower, right?
Yeah. I think, I don't know anybody personally over there, and I don't know, but I would think that they will be, I'm assuming, my belief is intelligence is evenly distributed around the world. So I think there's a lot of really smart people in Saudi Arabia. It may be a little expensive learning some lessons. I don't know the answer to that, but I think they're having learnings and they have a lot of money. They have a lot of cash flow. And I think over time, they're learning how to invest. I think you saw that in China. China didn't know how to have banking and capital markets and all this stuff back in the 80s and 90s, and they learned. Same thing with Japanese. I remember the Japanese had no idea. When I was in elementary school, I remember a teacher gave me a yen. And at that point, it was 400 yen to the dollar. And they make trinkets. And now, another contrarian bet, Warren Buffett bought shares, and maybe Japan is finally coming out. I don't know the answer to these things, but...
No, these are the right questions. So I'm working through them myself. And yeah, Buffett in the last 6 to 9 months has invested in, I believe, 3 to 4 different Japanese companies. And there's an advantage to autocracy. I'm a defender of human freedom. Let's get that out the way first. But if you look at like the rise of Singapore and the China... you can move quickly to establish new institutions and legal frameworks to get stuff done. And on the other hand, though, look at China. You've got youth unemployment at double-digit levels. They've stopped reporting youth unemployment. And there is a higher risk of instability. It's hard to quantify these things, but there's a risk factor there. And it's easier than ever to get information. Remember, was it like 10 to 15 years ago, you see these like flash mobs that would organize around the cell phone. Mm-hmm. And in a way, the cell phone and the speed of information was more powerful than a tank, right? Tank's not getting a phone call for a few hours. They got to get the people together, then organize and mobilize. There are these tail risks or weaknesses to being autocratic that we may not be appreciating right now, including, of course, what's happening in China, where people are saying, hey, look, I'm experiencing losses on my property values, or I don't have the bill. I did higher education and I'm being told that I should get a job as a waitress instead of pursuing something to be said for free markets and demand.
Yeah, I am a free market person and that type of thing. And I think democracy works for us. I think there are other types of governments that work for other people, and I'm not going to be that judgmental on them. Frankly, I think if you would have looked at us at around when we were 60 or 70 or 80 years old around the Civil War, I think people would have thought, if we would have been around, this would have been 1860 and the rest of the world would have been in 2020, I think we would have looked a little barbaric and we would have looked a little out of control and we had growing pains.
Oh, yeah.
And
no doubt about it. And
yeah, in a world where we're sharing one planet, I think we have to, I guess it's this policy of strong fences build good neighbors. I think we have to build strong fences, but I think we got to be good neighbors.
Yeah, it's a really interesting point. Democracy requires institutions. That was my big takeaway from Alexis de Tocqueville. And when he's traveling around,
that's the intellectual to me. I didn't read that.
His basic point was like, we have today, what civil society? We have the Rotary Club. I think I've only been to one Rotary Club session. A friend invited me once. I really don't understand what that entails and means, but we have nonprofits, we have foundations, we organize locally. Yep. If there's a crisis, people come together, they do fundraise. There are programs that teach STEM in disadvantaged communities, all this civil society. And you think about what went wrong when in the collapse of the post-Soviet Union and Russia didn't have civil society.
Yep.
And the US said, hey, we're supposed to try democracy and capitalism now, but you need institutions, private institutions, self-organizing institutions where people have norms and standards. Silicon Valley is an example of that, or the culture of angel investing, or the culture of not deceiving investors, for example, which there's a lot of trust when you're investing in the startup, right? And they're really interesting. Well, shifting gears a bit, banks inside and out, you were an executive and an operator for decades at Citi. What's your take on the banks?
There is one question here that relates back to China, which is thoughts are bill and deflation. I just want to say one thing. We got to remember that the U.S. is not really a big export economy. I think exports are only 8 or 10% of us, maybe slightly beneficial to us, but not, it would help on our inflation numbers here, but it may not slow down our economy that much.
The China weakening may not slow down the U.S.?
Yeah.
It's really interesting. In the earnings reports,
a bit more, but not less.
It's the whole question of China gets a cold, does everyone else sneeze, right? I will say this, though. Looking at, say, Louis Vuitton's 10Q and other earnings reports, what was really interesting is that I'm starting to see for the first time discussion of the strength of the Chinese consumer. Yeah. It's always about the U.S. consumer. And there were 3 earnings reports we saw where Tesla is another one.
Yep.
Right? So we're exporting Teslas and iPhones and Starbucks to China. And then we import manufacturing and other products from there. But on the banks, and I'll give you an open-ended question, take it wherever you want, because you have a lot of wisdom and experience around the banking sector. What are your thoughts around the banks? I'll give you a leading question. I think banks are really incredible institutions. You can borrow short, you can lend long, you have deposit insurance, you have protection from competition, which doesn't help the consumer, but it helps you if you're a shareholder. I think banks are cheap cyclically right now, and there are opportunities there outside of the regionals, given their CRE exposure, et cetera. What's your thoughts on kind of banking system opportunity there, et cetera?
Okay, 3 things. One is, I think somebody I used to work with has done a far better job running a bank than I would guess everybody else in the banking system. That's Jamie. You got to give
Jamie that.
Yeah, you got to give shout out. He's done a great job there at JP Morgan over a very long period of time, in a tough period of time. Second thing with bank.
You worked with Jamie back, when was that?
In the 90s.
The 90s. And at what role? Was he at First USA then? Or
no, he was at Primerica and Citi. He was at Primerica, Travelers. Yeah.
We'll come back to Jamie in a moment. Go ahead. Sorry.
Yeah, that was 1. 2 is banks are hard to run. You have to be, it looks like there's a little bit of you want to get a little greedy. You want to get offsides on your positions. You want to borrow short, lend long, or the opposite. And you got to be super disciplined, and you really got to understand what risks the banks are taking. I think that is really important, and I think that's underappreciated. And I think you need good systems and you need good data to really understand what risks you have. And what you saw back in the beginning of this year was pretty disappointing. It seems to happen once every 10 or 15 years to the banking system. People get complacent and they get off sides. And I could go into, I was running a part of a match book, and we would never go that. We weren't in the business of speculating on our balance sheet. We were in the business of banking. And I think that's the second issue. Third is, I think you need a clear and stable regulatory environment. And I'm not sure you have that now in the United States, because when you're doing things, you want to be able to plan for 10 or 15 years out. You want to know that the rules are the rules. Here's the game. Not the game, that's a wrong word. But how do you, what capital is required? What do the regulators want? How do you make sure you provide enough information to the regulators? How do you run a good, clean institution where at the end of the day, a bank's business really is providing loans, accepting deposits, and providing loans to businesses to help the country grow.
Absolutely. No, it's a critical function. And I generally agree. Look, banks have 10x leverage. It's more than a hedge fund.
Yep.
And they operate with duration mismatch by design. Right. If you're a CEO of a bank, you have to be a CIO first and not lose sight of that. And you have a lot of these community banks where the CEO went through the ranks and talks about their experience as a bank teller. That doesn't qualify you for the job, actually.
Can I disagree with you?
Go ahead.
Because I grew up in the brokerage business. My first job when I was like 13 years old was sitting in a vault at 17 Battery Place North, no windows, and they just painted it. So I was sitting there. It was not a great experience, but I had to pull securities out and send them. And then I went to the margin department and I did margin calculations. And it gave me an unbelievable feel and understanding. What does it mean to be a broker? What does it mean to have customers? I think that basic understanding of the banking system.
That I agree with you, like understanding how the machine works.
How the machine works is because every bank has these little things that are critical. We used to write checks on East Coast banks for West Coast customers and reverse so we could get an extra 3 or 4 days float, because that's how companies operate on cash flow. And that's coming back to my point of at positive interest rates, you really need to understand your cash, your money, and what's profitable and how to run a business.
I totally agree. Knowing how the machine works helps a lot. I'm a big fan of tokenization, for example, but I'm not at all excited about real estate tokenization because you realize that you need the support of the county clerks. Right. That's not going to happen. Right. But if you know how the machine works, then you can identify the right opportunities to focus on and see how you might transform that system into a better world. So very fascinating. Any thoughts on Jamie, like what made him successful as it relates to disposition or leadership style? I don't know if you have any points of view around that or any personal anecdotes or experiences related to...
Everything I know is old, but...
People don't change that much though.
But what you can see is, I think, first and foremost, he understands what's going on. He knows the numbers. He knows what risk there is in the bank, and he understands the business. He's picked really terrific people. He's a great manager, and that's worked out super well for him. And he works hard, and he understands how to acquire something. And you see this time and time again. And JP Morgan has done great. It's not a stock recommendation. I'm just saying, from an operational point of view, the bank is done really well.
Yeah, no, it's really, they generate a 15% ROE. I'm long JP Morgan, by the way, in full disclosure, although I think it's run up quite a bit. I'm not giving financial advice here. The fact that they generate so much net income at scale, I think is remarkable. If someone offered me to buy Stripe for $50 billion or buy $50 billion of JP Morgan, and I could actually harvest the cash flow of JP Morgan if I owned it outright, let's say in a theoretical, I'll do JP Morgan all day long. I can keep growing that business for a long time to come. Fascinating. Some other quick things on the bank side. I think UBS is interesting. I think their acquisition of CS was a take under. It was a gift. And then, of course, they have the ring fence from the sovereign and a liquidity facility, which they said they didn't need, and they turned that in. So UBS is not only too big to fail, it's at the level of a sovereign. There are two banking systems. There's the U.S. banking system. There's a Swiss banking system. If you want to work in the U.S., you have 4,000 banks to choose from. If you want to work in Switzerland, there are different kinds of banks actually there. But UBS is really the only game in town and the largest in wealth management globally, which is a relatively simple business. You're not doing underwriting. You're not doing proprietary trading.
Let me ask a question. Can I ask a question? Sure. On something like that. The question I have with some of these bigger banks, and not necessarily JP Morgan, but maybe with the UBS and maybe with some of the others, have some of these banks gotten too big to run?
Yes.
And
they have. Yeah.
And does it stifle innovation? Does it stifle decision making? Does it and there's some U.S. banks also I could put in this category.
Absolutely.
Say who is who and what is what. But the question is, at least in my mind, do some of these banks have they gotten too big, or where they just become too bureaucratic? It becomes too hard to make decisions, and it gets too hard to get stuff done.
Absolutely right. So Jamie cracked the code because he has executives running different, and I have good insight into how JP Morgan operates.
I do not.
Used to work
If I have not been there, I don't.
It's a machine, and I don't want to make this about how JP Morgan operates, but it's incredible what he's done. But Citi, for example, not to put Citi in the spot, but there you can find us on the website. The Executive Management Committee is at least 35 people last time I checked. How do you get anything done? Just the agenda setting alone would take hours.
Yes, I have no.
And
not to. Yeah.
And then I think other banks that are smaller, like Goldman Sachs, it's a clear, easy to run business. But UBS, it's wealth management. It's a simple business. You can run that at scale. You're sourcing opportunities. You're doing asset allocation. You're doing client service. You have account executive coverage. There's a way to make that work. But no, I agree. I think you're right. I think many of these U.S. banks are not only too big to fail, they're too big to operate well and effectively. And I would love to see competition introduced. And Bank Holding Company Act prevents that. There's a reason why Amazon bought Whole Foods but doesn't have a bank. There's a reason why Apple has 150 million credit cards on file, but the bank on record is actually Goldman Sachs. Google has tens of millions of merchants as customers, setting up web pages, hosting, Gmail, whatever else, and tens of millions of consumers. They've got both sides to go build a market that can compete with a Visa or MasterCard. And they all need to find new avenues for growth. Facebook has tried DM for payments. They took the inspiration from WeChat. So you look at big tech, they're not growing as they used to. Some of them still are, but several are not. And if they could get into banking, one is they're well capitalized, they have tons of capital. Apple's doing $90 billion of buybacks. That's almost the size of the FDIC insurance funds. And they could reinvigorate the technology and create competition for the big banks. And more importantly, I think the big tech companies have their own sets of issues and have concerns around that as well. But rule of law would mean that you open competition to other players as well. Like Walmart could get into banking, for instance, or smaller entrepreneurs or VCs could pass the hat around, bail out Silicon Valley Bank and reimagine banking. Or Coinbase get into banking. There's a lot one can do. I'll get off my banking stump speech there, but a lot to do.
No
worries. Should we get into longevity?
Yes.
All right. How do you think about your approach to health and what gets you excited about longevity? I think you and I are reading the same book.
We are. You're further along in the book than I am. But that being said, I actually have been reading Faster Cures by Michael Milken. I'm almost finished with that. Yeah, let me talk about longevity. I think it's I think the whole healthcare space is super interesting because now there is this whole view on you can actually process a lot more experiments a lot more quickly at scale and get more results. The human body is still very complicated, and we're more complicated than mice. We've cured a lot more mice than humans. And it's really interesting. I don't know, yesterday speaking of longevity, there was an article in the journal about, I think it's Altos, started by a guy named Bob Nelson, who runs a very successful venture fund. And what they're trying to do is almost anti-aging, is they're trying to take stem cells back to regenerate them early. I think all this stuff is just tons of interesting research going on. I'm on the board of a neuro hub on the West Coast that puts together 3 big universities, UCSF, Berkeley, and University of Washington, to get the best experts to really do deep brain research. And because one of the big areas, especially for longevity, that we don't know a lot about is the human brain. We all have one, and we don't know that much about it. And there's going to be there are some pretty serious diseases that are going to tax our healthcare. Dementia in all its forms, Parkinson's, multiple sclerosis. There's a whole bunch of diseases, tumors. So that's super interesting. Personally, I shouldn't say my age, but I'm in my mid-60s. And all of a sudden I realized getting old is not for the faint of heart. It's hard. And you get arthritis, things hurt, all that kind of stuff. I changed my diet completely. My wife and I we do some smoothies, athletic greens. I monitor my blood sugar, which actually in an app that actually helps me not eat a lot of carbs because I'm pretty carb.
Do you have a CGM? Do you have a real time?
I do have a real time. It's an app called NutriSense, and I do get a CGM. I wear the Whoop band, which the 2 Sigma is an investor in Whoop, but I do that to monitor my sleep, my athletic, how my heart rate is doing, my sleep, my oxygen levels, etc. I don't know if I should say this in the podcast. I do monitor my urine weekly. There's another app that does that to check that kind of thing. And then I'm looking, what I think is really interesting, and I'm looking at a couple of funds. All of a sudden, there's a bunch of funds coming out in the longevity space, which I think could be interesting. But the other thing that I find interesting here is there's some really expensive private healthcare doctors that you can spend anywhere from $50,000 on up per year, where they do full body scans, they do the full range of tests, batteries, and have all sorts of experts look at you and can find stuff super early. I think that's healthcare for the very, very wealthy. I do not use any of those. I'm hopeful that the interesting use case there will be, as they get more and more data, this will be able to become cheaper and cheaper, along with genomics, to become actually something that everyday people can take. And one area that may be coming down the pike in that area is this liquid biopsy space, which is basically a blood test that may be able to detect all sorts of cancers at a very early stage. There's clinical trials going on in that space. Grail has a test out called Galleria, which I think you can pay like $1,000 and take. So there's a whole bunch of those type of developments going on. And then there's another one. As your brain gets older, it's opening on the west side of Manhattan. It's called Aviv, and it's bariatric chambers that will work with your brain to help stimulate growth of your brain cells over time, and it's based off of Israeli research for the past 15 years. So again, very bespoke, very expensive, but there's some really interesting new products and ideas out there for longevity.
I totally agree. This is an area of mutual interest of ours.
I'm pressing more now than I did when I was 35 years old.
Wow. I'm not going to ask you whether you're doing any testosterone hormone replacement therapy. I got to look into that myself.
No, absolutely not.
Okay.
No.
Okay. Wow, that's amazing. Yeah. Congratulations.
No, and I box once a week. I don't get hit, so just to be clear. But yeah, my trainer's actually going with, at your mid-60s, you're actually getting stronger.
You get to hit, but you don't get hit. That sounds like a pretty good deal.
Yeah, I have a term for it, but I don't know if I can say it on a podcast.
You can text me that one later.
Yeah.
That's not a bad... I have that relationship with my kids. They can beat up on me pretty much all day long when I'm trying to sleep at night. So I'm familiar with that arrangement. Yeah. There's a lot there. It's incredible. And the book we're both reading is I Will Live by Dr. Peter Attia. Peter Attia is a doctor's doctor, and he's a concierge doctor. I emailed him a few years ago. So one of my COVID binges was listening to his podcast for hours and hours on end. And I emailed him, and his rate, I think 4 years ago, it was like $50,000 a year. Now it's $150,000 per year.
Yes.
And there is a startup ecosystem. It's more of a sign of, to your point about growing demand for this. And they're focused on longevity. So they'll manage your primary care physician, right? And they'll do the diagnostics you mentioned as well. And I've been able to apply some of these. I did it at Advanced Lipid Panel. I got a CAC score test, even though it's not standard of care. Mm-hmm. I asked my doctor, you can get those for $20, $50 out of pocket. Yep. I haven't done a VO2 max test because I know it's going to say that I'm well below where I need to be. Mm-hmm. I know that. So that's called just do some more cardio. But I think the innovation is incredible. There's this publicly traded company, I don't have a view on it, no position on it, NFA, et cetera, called Schrodinger. Yep. And they're using LLM. So you're familiar with it, right? They're identifying sequences, protein sequences, mRNA sequences or molecules that can be used to treat different afflictions. And they rev share with a company that adopts it. They don't even charge. They say, look, here, what's your issue? Okay, here's a molecule. Consider this. We'll split the upside. That's one. Second is Novo Nordisk, which is a European healthcare stock. They two things. One is, of course, the kind of all the rage because of this weight loss drug. I haven't looked into that personally, but weight loss is a driver of longevity, improves your BMI, improves blood pressure, reduces risk of cardiovascular disease. But the other is they're testing in clinical trials now a new way to treat atherosclerosis, which is the number one driver of mortality. And we can control cardiovascular disease with prevention and treatment of all the four deadlies, cardiovascular. And so they have a new drug that melts the plaque away. And as statins will freeze the plaque in place so it doesn't trigger a stroke. This one will melt it. It's in clinical trial today. I have a friend that's testing that. They reached out to their doctor. So that's incredible.
Yeah, let me,
yeah,
because part of what you said that I think I do want to say is, I think the human body is super complicated, and we're finally starting to ask the right questions and in the longevity space, and we're beginning to get more data and learning. And one example I'll use is a lot of people take this drug called metformin, which is, again, an anti-aging weight loss drug that are prescribed for people in their 60s or later on that sort of can't hurt. There is some evidence that for Alzheimer's, there's several mutations of this APO gene. There's 1, 2, and 3. Let's skip 1 for the minute because that's good. Oh, no, it's actually 2, 3, and 4. So skip 2 for a minute. APO3 is a normal person. They think metformin actually will decrease the chances or could decrease the chances of having dementia. But if you have APO4 and you take metformin, you may have higher odds of getting dementia. It may be higher than normal. So these things, and I heard this at one of these concierge medical places, they were talking about it. And I think, we want to take all these supplements and healthy things, but we also, over time, we need to learn about all the interactions and how they interact with our genome, our biome, our mRNA, our proteomics. The body is complicated, but I think we're getting to the point where we can start processing this data. And back on your large language models and the AI, and I think one of the issues is how do we solve, here's an issue I'm really interested in, is how do we solve the issue of getting hospitals and large data sets to be able to, number one, share, and number two, to be able to compute on them cheaply. Because you got to you're talking about terabyte and petabyte. And
absolutely.
So that's
HIPAA compliance and which is the constraint on a lot of them.
Yeah. So I think that's a super interesting space. And the data, a lot of hospitals regard their data as proprietary, so they don't want to share it, but there may be ways, multi-party computation, where you can just analyze parts of it to get your results back. So anyway.
Yeah, no, there's a lot there. It's incredible because as with the genomics revolution in 2000, we had this biotech bubble. It didn't go anywhere. That was a big dud. And we had the rise of the 23andMe and other tests like Ancestry.com, but those were just small samples and tests. But now for $100 to $200, you get a full DNA sequencing. That technology is coming online. Mm-hmm. And now you can start over time, it'll take years, find the interactions between your personal biology and medicine.
Yep.
Super interesting. Yeah, metformin is an interesting one too. Metformin, I see friends starting to take metformin, even though they're not indicated for metformin, meaning they don't have like insulin resistance, but it does reduce inflammation, which is one of the kind of background conditions that can aggravate other issues. But I had not heard about this interaction with APO4.
And that was just some doctors speculate. They think there's some evidence of that. And there's a lot of interactions with a lot of things. And I try and keep my supplement taking to a relative minimum. And
really? I take 8 supplements every day.
Do you?
I could. Oh yeah.
I take magnesium at night because once in a while I'll get a cramp.
Yep. Right.
And I was a little bit magnesium deficient. And athletic greens I drink in the morning to get some vitamins with some with regular protein powder, and it keeps me full until lunchtime because I love eating.
Interesting. Who doesn't? I love eating too.
And the other is I've out on drinking. So,
I've cut back that holidays gets a little difficult, maybe, but like there's one of the key takeaways is there's no benefit whatsoever to alcohol, including the whole red wine studies. Those were longitudinal study, flawed science.
I agree.
But on supplements, I got a NAD. Have you heard about this NAD plus, by the way? Like it supports mitochondrial function declines as you age. That is interesting. I want to look into that, but how you ingest it matters.
Yep. Yeah, same thing like turmeric, anti-inflammatory. But most of turmeric gets dissolved in your stomach. It doesn't have any effect. And some people say, drink it with milk, take it with pepper. I think you really got to understand these interactions. I think most of the case with these supplements, you're going to wind up wasting money than getting any real benefit.
That's the conventional wisdom. Talk about not consensus, right? The conventional wisdom is that you urinate the supplement. And I like Dr. Rhonda Patrick's view. She is a researcher and doctor at the Salk Institute, which studies anti-aging. She got a great podcast. That's another one of my COVID binges as well.
Okay.
See, her point is that we have too much of the supplements that we don't need and not enough of what we really need. Right. It's an interesting way to look at it, right? It's almost like the spectrum analysis. There's a gap. Yep. And she clued me into krill oil, which is the only form of fish oil that passes through the blood-brain barrier. That's one. So I take that every day. I take vitamin D with K2 so it doesn't cause calcification of the veins and arteries. So the K2 component is key. And of course, vitamin D, especially when we're spending time indoors. And
krill oil per second. Yeah, I was out and my wife bought me a jar of this thing called sea moss.
Okay.
Which is this gooey stuff that is supposed to have all these anti-inflammatory and all these great effects and everything like that. I took a spoonful of it. It may have been the foulest tasting thing.
Oh, God.
I've ever had.
Oh, boy.
She jokes. But that comes back to, I think part of your point here, and something we need to know more about and work on is what is the bacteria in your gut and how is that working together? I think that determines a whole bunch on our inflammation, how we live, and all that kind of thing. So I try and eat a little.
I totally agree. There's some startups that are doing this whole like stool testing, right? You drop ship it and they come back and they give you, you spend like $400 for that. Right. Yeah, you're right. That you could, it definitely is a drop something there.
It's a bad customer experience. Yes.
Yeah, it's definitely inconvenient.
Yeah. So anyway, yeah.
They need to make the UX better by having like the toilet modernized. Like it collects that and the urine sample and creates a score.
Stanford was working on that. There are some people working on a smart toilet.
Really? Yeah. Smart toilet?
Yeah.
Talk about in-home technology.
Yeah.
I like that. Sign me up for the smart toilet.
Me too.
I think I'd be willing to invest in that one. Very cool. On the smoothie, is it a low sugar smoothie?
Yeah. Yeah. Okay. My wife makes it. It's basically, we do unsweetened vegan almond milk, some fruit, some vegetables. And then we put in things like spirulina and hemp and flax and chia and all that kind of stuff. And it actually winds up tasting okay.
Yeah, that's a pretty low bar.
Yeah.
It tasted okay.
No, it actually...
Do it every day.
In all fairness, it tastes actually good. We started doing that. And
I like that. It's a good strategy, good model. What else? And I guess we're both working through Peter Attia's book. Yeah. I'll give you the summary. There are it calls it the 4 horsemen. And it's look at the mortality distribution. The number one driver of mortality is cardiovascular disease. That's one. Number 2 is cancer. Number 3 is neurodegenerative disease. And then number 4 is, call it metabolic dysfunction, which includes type 2 diabetes. Now, somewhere in that mix is called slips and falls. Of course, from sarcopenia, people break a hip, bad things happen. And here's another funny one. I think it's like number 6 or 7 on the list. Making a left-hand turn on the road is like one of the highest risk activities, apart from like driving motorcycles.
That's why I don't drive.
So I drive, but if someone asks me, are you above average driver? I will answer no. I think I'm fascinating though. Great stuff. I know we've spent a lot of time here, but anything else you want to share on ed tech, commercial real estate, upcoming IPOs, any other concluding thoughts or topics you want to?
No, yeah, I think we're right at the time. At some point, maybe I can come back and we can talk about education. I'm on the board of a NAF, which works with about 110,000 underprivileged, underserved children across the country, teaching them STEM, finance, and a bunch of areas like that, and then gives them paid summer internships. But I think our educational system needs to be revamped, but we can discuss that for another time.
That's its own topic. Yeah. I fully agree. I hope we disrupt college before I have to pay my kids' tuition bills. So
me too.
We got 10 years before that happens. Thank you, Mark. And how can people follow you? On
LinkedIn, Twitter. Yeah. What? And markpweill.com. MarcPweill.com.
Terrific. Thank you so much, Mark. Always a pleasure. Until next time.
Great. Thanks.
Take care. People, make a great day. Bye-bye.
Thank you for listening in on the episode. Remember, in the world of investing, the road less traveled often leads to the greatest rewards. I'm Ram Ahluwalia, your host and Chief Investment Officer at Lumida Wealth, where we specialize in the craft of alternative investments. Invest wisely, stay ahead of the curve, and stay non-consensus.